For decades, oil transactions have been almost entirely dominated by the US dollar. This system, known as the petrodollar arrangement, has helped the United States maintain its global economic power. But what if that system is now being quietly dismantled? What if one of the world's biggest oil producers, Saudi Arabia, has decided to change sides? In a move that has stunned insiders but barely made headlines in Western media, Saudi Arabia has deepened its oil ties with China, not just through normal trade, but through a growing number of secretive agreements designed to bypass the dollar entirely. Reports confirm that Saudi Arabia and China are finalizing long-term deals that would allow Chinese companies to pay for oil directly in yuan, not dollars. While public announcements have been vague, energy insiders have leaked details suggesting that these yuan-based contracts are already active behind closed doors. The implications of this shift are massive. Saudi Arabia has been the cornerstone of the petrodollar system since the 1970s. After the U.S. cut ties between the dollar and gold in 1971, it was Saudi Arabia's agreement to sell oil exclusively in dollars that propped up America's currency dominance. If Riyadh breaks that decades-old tradition, it's not just an economic story. It's a geopolitical earthquake. Why is Saudi Arabia doing this? Several factors are converging. First, the kingdom is no longer willing to rely solely on the United States for its security or economic future. Second, China's economy is now the largest importer of Saudi oil, even larger than the United States. Third, Saudi Arabia is actively diversifying its partnerships through organizations like BRICS, where China plays a leading role. In fact, Saudi Arabia's recent membership in BRICS has accelerated its pivot toward non-dollar trade. Leaked memos suggest that Riyadh and Beijing are discussing not just oil sales in yuan, but full energy cooperation projects, including joint ventures in renewable energy, nuclear development, and critical minerals like lithium and cobalt. And the pace is accelerating. China's national oil companies like Sinopec and CNPC have signed expanded cooperation agreements with Saudi Aramco. Some contracts now reportedly include currency swap clauses, allowing for transactions in Chinese yuan, Saudi rials, or a potential future BRICS currency. The White House has publicly downplayed these developments. But former U.S. Treasury officials privately admit that if oil is routinely traded in currencies other than the dollar, the United States' ability to print and spend freely would be severely weakened. The dollar's strength is built on demand, and energy is the single biggest driver of that demand. Some experts argue this shift won't happen overnight. They point out that global markets still trust the dollar for liquidity and stability. However, the foundation is clearly cracking. Even a partial move away from the dollar in energy markets could trigger a chain reaction, prompting other nations to diversify their reserves away from U.S. Treasury bonds, leading to higher borrowing costs and inflation inside the United States itself. Moreover, China is playing the long game. The rollout of its cross-border interbank payment system, CIPS, an alternative to SWIFT, offers a ready-made infrastructure for yuan-based oil transactions. Saudi Arabia is already in early talks to integrate with this system, further reducing its dependence on Western financial networks. Meanwhile, American influence over Saudi Arabia is visibly fading. Last year, President Biden's visit to Riyadh ended without major agreements. And Saudi Arabia has repeatedly ignored U.S. calls to increase oil production, instead cooperating with Russia under the OPEC+ framework to manage global oil prices, often to America's disadvantage. Put simply, Saudi Arabia is hedging its future. Instead of trusting a single partner, it's aligning itself with a multipolar world order, one where the US dollar is just one of several major currencies, not the uncontested ruler. The question is not whether the dollar will lose its dominance overnight. It won't. But the erosion has already begun, and Saudi Arabia's secret oil pact with China is a powerful sign of where the world is heading. For those paying attention, this is not just an oil story. It's the beginning of a new global financial system, one where power is shifting quietly, steadily, and irreversibly away from Washington and toward Beijing. And the world may never be the same again.